I want to move over to this example because I think it's really important. And everything that we've touched on has been some sort, I keep saying it, of a relative value opportunity. I was walking through this with Zach, and I thought it would be just beneficial for everybody. Here we go. And this all started because one of the trades on the futures week ahead is getting long HORB, heating oil RB. That's getting long here. We look at a little bit longer time frame. So what I want to do is kind of explain how we found this trade, why we're long, and why, see if it makes sense to you. Here's HORB. It's just a relative value trade. You're buying one and you're selling another. Now, you may be thinking, well, I don't trade futures, so this isn't for me. This is for you. If you don't trade futures, you trade stock or ETF, it's all the same stuff. If you get long gold, whether you get long gold futures, whether you get long physical, whether you get long gold options, whether you get long a gold stock, you'll make money if gold goes higher, and you're going to lose money if gold goes lower. So it's all the same thing. HORB, this is buying HO, selling one RB. Or if you want to sell this spread and bet for it to go down, you're selling one and buying the other. A trade that we've been in is getting long this HORB, because as you can see, this is the lowest it's been at for a very long time. So if I take you back to this lesson, here's what we're doing. Heating oil RB is the light blue one. The dark is heating oil against oil. And then the purple or pink is going to be RB against CL. Okay? Is everyone following along? You guys see like how this chart works?
One question, Jonathan, that, I know the answer, but maybe others don't, is why is CL related to the other two?
Excellent. They're all related through the crack spread. Without getting too far into it, the crack spread is breaking out the distillates of gasoline. And so HO, RB, CL are all connected. They're all connected through spread, guys. They're all connected through different spreads. And we could also trade that crack spread, but again, that's going to be the next level from this. But what I want you to understand, so this is Energy Edge, a tool that we use in order to monitor or just look at the relative difference. May 2017, this first line. October 2018 is going to be this second line. March 20th is going to be 2020 is going to be this line. Today is going to be this line. Okay? So May 17th right here, purple and blue are high and light blue is low. So that's why I did it purple, blue, light blue. We get here. Now look at the difference in prices. RBCL is now very, very weak relative to those other two. Notice how it keeps flipping around. The role of the trader is to keep markets efficient. That's the role of the trader. It's not to guess that game is going to trade $500 or AMC is going to trade $150. The role of the trader is to sit here throughout the day, and we build tools that make it as straightforward as possible. But the role of the trader, and I keep saying this over and over, because it doesn't matter if it's futures or options, it's all the same stuff. This is the exact same thing as comparing different uranium trades. Okay? So right here, and let's do this. This is October 2018, right? This one right here. How could you take advantage of this? How could you capitalize on this inefficiency? Well, what could we do? We would buy the purple. Okay, so watch. I'm going to go RB, CL, and then heating oil, HO. Okay, so if we're doing this one right here, just highlight you that we're doing you right there. Well done, Jonathan. So HORB, right? We're right here. So HORB, we would sell one, sell an HO, and buy an RB. And we'll sell, and then we'll buy. We'll color code them. Okay, we're right here, right? So we sell an HO, buy an RB because that's the blue line. Sell an HO, buy an RB. Then we sell an HO and buy a CL. Okay, so if we sell there.
So we're selling both lines that are expensive.
Selling here, selling here.
Got it.
Right? And the first one is HORB, so we sell the first one, buy the second one, and the blue line, you sell HO, buy CL. Well, at the same time, here you buy RB and you sell CL, right? Buy RB. We're going to buy an RB, and then we're going to sell a CL. And this would be the way to capitalize on this trade. And so now, don't steal my thunder, Pablo. Big finish.
I got my mic muted. That's
So look what happens. Anybody want to tell me what's going to happen?
Does anything look weird? Does anything look weird from that thing that Jonathan just put up there?
Okay, so look what happens. And Thomas, it doesn't matter if it's November 2018 or October 2018. It's the same. That's missing the point.
He's going over the concept.
There you go. October. Same exact thing. Right? So watch what happens, guys. RB2, right? We're long 2. Those are netting each other out. There's no oil position and short 2. So when we talk about trading with edge, when we think, or when we try to explain to you that there's an advantage to trading this way, now I'm trying to prove it to you and showing you that, listen, there's a real advantage in trading this way. And these are futures, but you could also find ETFs on all this stuff as well. 2, what about if we take this down even smaller? Can we also just do 1 by 1? We don't have to do 2 by 2. Right? So,
Jonathan, is the reason that there was a 2 by 2 an artifact of the fact that we're just overlaying 2 spreads and reducing them down?
Yep.
Right? Okay.
Yeah. That's all it is, right? So in order to capitalize on this in October 2018, what you'd want to do is buy or sell this spread. And it's sell because HO is first. So we sell an HO and buy an RB. So watch what happens. Now, if I go back to this chart and we go to October 2018, we sell, and this is just 1 by 1, guys. If we do it October 2018, how you doing? October 2018. I'll put this in a way that you guys can see it and it makes sense. Does that make sense for everybody? That you can see the trade, you can see it develop. And this is what we talk about being on the right side. Sell 1, buy 1. Why are we doing that? Because look at this movement. They broke apart. This is, no, it's, of course it's a little confusing, Linda, because you've never seen anything like this. It's completely different than how retail traders approach the market. But I'm showing you this example with HORB. It's the same thing as me doing the uranium example. It's the same trade.